Good day, everybody. Welcome to my YouTube channel. It's good to have you here again today. So, please, if this is your first time on this YouTube channel, please do well to subscribe to this channel so that whenever I upload any video, you'll be the first to see it. So, please, in case you have any suggestion, any opinion, please do well to comment it in the comment box. It's very important, yes, for review sake. Now, I want to quickly help us. There are three issues I want to be considering today. The first issue is how to use your trend line, how to draw your trend line. Then the second issue is how to identify your major support, major resistance, minor support, and minor resistance. And another thing is how to use your Fibonacci correctly to trade. How to use your Fibonacci. So all these three things I have mentioned, they are trading tools. You don't really need all those other indicators. These three are actually enough for you, and some other ones too. So these three that I have mentioned is very, very vital in this business. Very, very important as far as this business is concerned. So I will be delving into my charts now to show you how to use these things properly. So now let's go. Now I will be using the pair I will be using for this example is gold. Like I told you before, gold is my favorite pair, so that is what I will be trading. That's what I trade most often. So other pairs I trade them too, but I don't really pay attention too much on them. So now let's now delve into this. Now gold, firstly I told you I want to be talking on how to identify your major support and major resistance. All you just have to do is to come to your weekly time frame to come and identify your major resistance and your major support. Now, looking at this, as far as I'm concerned, it's very easy. This is your new high. Gold over time has not gotten to the price of 2,400 and 430 before. So this is, it got there, and you can see this pullback coming down now. So the first thing you will just have to do is to come here, draw your line here, put your trend line here. So I'm using this rectangle because I'm using trading views. I prefer this. Yep. So now when you identify this as your new high, looking at this candle, most people do not usually consider things a candle like this, but I've identified that a candle like this over time, over my time on this in this business, I discovered that candles like this is usually a very strong one. It's a strong level that you need not to ignore. So now I'll be picking another this tool now to draw a resistance, to draw a support here. I'll be taking this as my major support. Yes, I'll be taking this as my major support. Take it or leave it. So this is my major support. This is a trend, this is resistance, new high. This is my new low. Then this is another low. If I want to pick, let me use this trend line. Let me use this trend line horizontal. Okay, let me use this horizontal. No, let me use this one. Let me use this horizontal ray. Okay, this is another level. All right, this is another. This is a low. This is a low. When going up, this place is your low. All right, this place is your low. When going up, this is your high. This place is your high. This is your high. This is your low, as I've pointed out. Then this is your high. All right, then this is another low. This is another low. This place is another low. Now I was able to pick this just simple like that because there were no previous low here. No previous low here. So these are new lows that the market had created. Now if you find yourself on other pairs that have not gotten new highs or new lows yet, this is what you will do. All you just have to do is to, for example, now considering this area now, all you just have to do is to consider, look left, like if possible you zoom in. If possible you zoom in so you can see it clearly, or you zoom out to see it clearly. So this is the first touch, this is second touch. Two touches are enough for you to identify your resistance or support. Two touches are enough for you. Now if I want to consider another level now, another support level now, I'll be taking this is a first touch, this is the first touch So over time too, there was a range of this same area. Then you can see now, first touch, this one is enough for me, here is enough for me. The market also consolidated in this area too, so I will be picking this place as my level, as my level. You understand? So also, if I want to pick another one again, I want to, okay, let's say for example the market has broken this place. Where should I be expecting next as my support? This place will be my next support here, because first touch, second touch, draw it, draw it, draw it. This place will be my next support here. I'll be considering this place as my next support. Over time, the market came to test. The market came to test here. It tested here over time. So now, after you have been able to identify this your support, then what is now imperative is that you should go ahead. Let me zoom in now. Let me zoom in now. You get it? So this place is your support. So this is why I like using this rectangle on trading view, so that it will be able to cover the whole of the area. So if you are using your MT5 to draw your levels, this is what you do. Pick this place. If you are using your MT5 to draw your level, you are not using trading view, then you pick another one again to make it solid, to solidify for you. This is first touch, this is second touch. Then if you come here again, like this place now, this first touch, second touch is enough for you. You don't need too much work on it. It's enough for you. Okay, I will use this place. You get it now? That's if you are using your MT5. I'm identifying the major this is a major support. Looking low now, this is a major support, this is a major support. Then I can as well pick this place. This first touch, second touch, third touch. First, second touch is enough for me. I can use this place. So if you feel like extending it, you can as well extend. You can as well extend, but I don't really need all those kind of extension. So this is enough for me. I've identified my support. When going upward, this is my low again. This is another low. I'm using this in case you are using MT5 for your analysis. So this is I can use this place. First touch, second touch is enough for me. If you check to the left again, you will see that there were many touches too. If you extend this horizontal line or ray to the other end. So now, after identifying your support and resistance, you will now see that as time goes on, as market keeps breaking and breaking, the previous low, the previous support becomes your resistance as time goes on. Look at this. We identified this as our support, right? We identified this as our support, right? We identified this as our support, right? Now let's look at this. The market came to form. This is your high. When you move from here to this place, this is your high. Coming down, this is your low. Going up again, this place is your new high. Here, this is your high. This is a resistance. This is a support. Don't forget, major support and major resistance. Major support, major resistance. Major support, major resistance. Major support, major resistance. Major support, major resistance. Now, let's now go further to how to identify your minor level. Come to your daily time frame or your 4-hour. Come to your daily time frame or your 4-hour. This is what you will do when you get to your 4-hour. This is what you will do. This is your minor resistance. This is your minor resistance. You get it? This is your minor resistance. Then looking forward, this is your minor resistance. If market leaves that place, this is where it's coming to. This is the next place it's heading to. Here is the next place it's heading to. How did I identify it? You see this market here now. So where is the next level now that I feel the market got to in the past? All I just need to do is to look left I've seen this place, I've seen this place, I've seen this place, I've seen this place. So that is why I'm considering that place as the next minor level. So if the market breaks here again, where is going to be the next minor level now? Before this major resistance, this is where it will get to. Here, this is it. How did I identify this? This is where minor got to before it had a change. This first, second touch, this third touch, this is another touch here. So that is all about that, on how to identify your major resistance and your minor resistance and support. So now let's now delve into how to use your trend line. How to use your trend line correctly. So over time, what do you see in this market? What do you see in this market? There had been an upward movement in this market. So all you just have to do is to draw your trend line. All you are doing is to connect the two most outermost parts after considering what the market is doing. If you observe, the market has been going up, really, 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 really up. So let me use this. Over time here, look at it. It has been going up. Now, what do you do in this case? How do you draw your trend line in this case? This is what you just have to do. This was the first support. This is second support. Identify two most outermost part and connect them. You're drawing it from the wick, not from the body of the candle. You are drawing it from the wick, not from the body of the candle. Now draw it like this. This is it. Drawn. Trend line drawn. It means that the market is up. It must not break out of this place. By the time it breaks out of this trend line, it means the trend is kind of changing. So all you just want is for the market to keep trading inside of this trend. Now, when you go lower to like weekly time frame, you will see that there might still be another trend line you need to draw. So let's draw it. This is the two most outermost parts. These two most outermost parts. This is a touch. This is a touch. This is a touch. You get it? The same thing applies when it comes to this this. I will consider this as my inner trend line. I'll consider this one as my inner trend line, then this one as my outer trend line. So now let's now go further on how to, if you can as well do it on a lower time frame. All that matters is be able to draw it properly. You are connecting. Okay, I can still come to this daily time frame to come draw it properly. I can come to daily time frame to come draw it properly. If there is something missing, yes, connect it properly. Very good. It's adjusted now. It's adjusted. Yeah, you can always come to a lower time frame to the one you drew it, to draw it correctly. Now if you come to your daily time frame, you will notice that there is okay, we'll consider this place as support, right? Now let's see this place. This is it. Two most outermost parts. When you come to your drilling, for example, you want to draw your trend line on your daily time frame. Now this is first touch, this is second touch. You get it? Then if you still want to look further to see if there is anything anywhere you need to draw your trend line, now you can still consider this place. This place is a touch. This is another touch. Consider this place. You get it now? You get it? So this is it. Connect this place properly. This is inner. Consider this place as your inner trend. This is the outer trend now. Outer trend line. So now let's now consider these other areas. Good. If you still want to draw this too, you can still connect this. You can still connect this one again. But this one for now is not really needed. Now let's consider this other one. Let's connect these two together. I have to do this so that you can understand better. Let's connect these two. You can even see that over time, after market had broken out of this trend line, you see that it has just been testing this first touch, second touch, third touch. first touch, second touch, third touch. So that means that trend line is very, very important. No, okay, let's leave that one there like that. It means that one is useful. So this one is no longer useful. This one is no longer useful. This one is no longer useful. Let's take this one out. Okay, now this place is the most, this trend line is the most important one now. So we won't okay. Now it seems this one is already forming. I can still connect these two. Yes, I can still connect these two. Come to lower time frame like 4 hour. You see it better and clearer. Okay, let's draw it properly here. Very good. I have done this now. Great. Great. So that means like this trade now is forming a kind of a funnel. It's forming a funnel now. Okay, now let me now go delve into how to use your trend, your Fibonacci. How do you use your Fibonacci? How do you use your Fibonacci? All you just have to do is to consider, let me use daily now to help you out, to show you how to use your Fibonacci. Okay, let's consider this place. All you just have to do, if you are looking at an uptrend market and your Fibonacci, you are expecting the market to pull back to your 50%. Like I said before, the use of Fibonacci is simple. Fibonacci helps you to identify an area where the market will possibly pull back to, or possibly retrace to. Fibonacci, I repeat, Fibonacci helps you to identify that area the market will probably or would likely retrace to or pull back to. Then when you're looking at an uptrend market, for example, like this one we are seeing now, the market has been going up over time. So now how do we now use Fibonacci? Identify a minor support, identify a minor resistance. So also it is on your major time frame. Identify a major support and a major resistance. Then connect the two of them. For example, we are looking at an uptrend market now. Now let's use this daily time frame as our example time frame. Now this is support, right? This is a support, right? Now we'll consider this place as resistance. Or let me use here. I'll consider this place as my support. All right, I'll consider this place as my resistance. Okay, my support, my resistance. This is what I need to do. I will drag it from the low to the high. From the low to the high. Now this is the area of, this is the retracement area. Let me take out this, since you have understood what my resistance and minor support are now. So this is 50%, 61.8%. 50% here, this line is 50%, 61.8%. This is the area you are watching out for your pullback. So if you also draw it from this place, let's consider this place again. Let me draw it from here. This is a high. Let's consider this place again. This is a low. You see now, over time, I'm drawing it from this low to this high. You see Fibonacci area. Then if you also consider this place, let's consider here too. This is a high. All right. Then this is a low. This is a low. This is a high. Now this is pullback area. If you also go further to the downside, you would likely see, just try it on other pairs, you will understand better. I don't want this video to be too long. So if you come to your weekly time frame, for example, you want to identify your major areas, let's consider here. This is a low. All right, so this is my new high. Let's look out for this. Look at this. This is a low. This is a high, a resistance. This is a support. This is a resistance. Connect it from the low to the highest. Your 61.8% is your pullback area, where you want the market to pull back to. Now let's not consider a downside market. Let's not consider a downside market. A downside market, yes. Let's consider a downside market. For example, let's consider a downside market. I'm looking for a perfect downside market. Okay. I'm looking for a perfect down. Thank God for this. So I will use this place as my downside market now. Now all you just have to do is to draw it from your previous high. Draw it from previous high, then to current low. Previous, like I will consider this place as the low, as the high. Here, use this candle as the high. So this is the low. This is a high. This is the low. Fortunately, it didn't pull back perfectly. It didn't pull back perfectly to the 50% level, but it is still the area. So you could easily make your decision here. Now let's now consider this. From this high, this is a perfect high, then this is a perfect low. You see now? Consider the wick, not the body of the candle. You are concerned about the wick, not the body of the candle. So this is it. You draw it from here like this. This is the pullback area. So if you also consider this one too, let's use here. Then this one as a new low. Perfect. So that is to the downside. You draw it. We are using your Fibonacci on an uptrend market. You draw it from the low to the high. Then if you are considering it on a low, on a downside market, you draw it from the high to the low, from the current high to the current low. Then if it's an uptrend market, you draw it from the current low to the current high. That is how you carry out your activities. Okay, now I don't want this video to be too long, so I will just stop it here for today. So please do well to subscribe to this channel so that you'll be able to see more of my videos as I upload them. And also consider subscribing, consider liking the videos. Just comment something on the comment section so that I will be able to use it to carry out our review. Thank you for watching today's video. God bless you, and may this forex favor you this week as you delve into a new week. So more profitable week ahead for you. Thank you very much. Thank you for watching my video today on this productive and value adding YouTube channel. Thank you. Cheers.